Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. We got the markets open and the markets are in rally mode. Dow's up about 200, Nasdaq's up about 100, but not so fast. I do think we're going to come back down and retest the recent lows. The lows back in June. Now, will those lows hold? I'm not so sure they will. But I do think that we'll get a little bounce up here, maybe a day or two of a bounce up back to the 50-day moving average before we come back in. Now, we have these things, they're called bear market rallies, right? Okay, we just had one. We dropped 23% on the S&P and we rallied back up 17%, and now we're coming back down to retest the lows. Now, if you go back to the dot-com days, now a lot of you are too young to remember the dot-com days, but it happened around the year 2000, right? Now, the high was reached in 2000 and the low was reached in 2022. So it took about 2 years and it dropped about 50% on the S&P. Now, in that time where we dropped 50%, there were 3 rallies that were 20% rallies. Bear market rallies are very common in bear markets and they're very powerful. 20% is a big rally. So we could have another one. Now, I don't think we're going to have one right now. We just got done having a 17% rally, but now we're coming back to retest the lows. That's just my opinion, okay? Now, what happens typically? Well, let's go back to the great financial crisis, 2008, right? All right, that was the last time the markets crashed. Now, what led the market down? Well, it was real estate. Real estate led the market down. Now, real estate started to crash in 2008, and the stock market followed. It had that crash in the great financial crisis, but it bottomed out in 2009. Real estate did not bottom out till 2012. Even though real estate started the crash, it took 4 years for it to finish, where the stock market got done in about a year and a half. So the stock market gets done quicker. It can get done in 1 day. I mean, you could wake up tomorrow and the market just crashed already, right? But real estate, it takes longer for the crash to play out. Now, it took 4 years back in 2008 for it to bottom out. It went from 2008 to highs down to the lows in 2012, 4 years, right? But I think it's going to happen quicker this time. I think it's going to happen in about 2 years. Now, the reason I think that is because we've rallied up so quick. Now, a lot of people think I'm just crazy. They say, Mike, you have no proof that the housing market's going to drop 50%. No, I don't. I don't have any proof. Nobody knows. I'll let you in on a secret. The secret is that nobody knows, right? The Federal Reserve, they don't know. They're raising interest rates. They could crash this market just by raising the rates. They don't know what's going to happen. I don't know what's going to happen. You probably don't know what's going to happen. All we have is these educated guesses, right? So when I talk about going down 50%, yeah, it's just my opinion. But let's look at some facts that kind of make this an educated guess. Now, I'm an economist and I love studying this stuff. And I'm a real estate guy. I love studying the stock market. I love it all. I mean, this is where my passion is, right? So I enjoy this stuff. I study it and I try to make an educated guess of what's going to happen. That's all I do, right? All right, well, here's some facts. I want to take a look at Toronto, Canada. Now, Canada, those are our good neighbors directly above us, if you don't know. But anyways, Toronto. Let's take Toronto. Okay, so you go back to March of 2021. March of 2021, they were selling over 15,000 homes a month. Over 15,000. Okay, 15,800 to be exact, right? Okay, so you come full circle to August of 2021. Now, August, full circle, last August, 2022. So March 2021, come back to 2022. Now, August is a hot month for real estate. March, not so much. But August, that should be a lot of sales. Well, they dropped to 5,000. So they went from 15,000 at the high down to 5,000. Now, I'm not a math major. Sounds about two-thirds of the volume have gone away. Okay, let's talk about prices in Toronto, Canada. Prices in Toronto, Canada, well, they hit a high. The average price was $1,340,000 1,345,000. They hit that high just 6 months ago, back in February, let's call it. So 6 months ago in February, they hit 1,345,000. Now, what happened in August? Just finished August, right? We're in September now. But in August, that 1,345,000 dropped all the way down to 1,079,000. It dropped over 20%, almost $300,000, $280,000. So let's say you bought a house in Toronto, Canada back in February, right? And you paid 1,345,000. And today you wake up and you go, wow, I put $200,000 down on that house. And it's gone. Your money's gone, right? It's been wiped out. It's been disappeared. You can't sell it for 1,345,000. So now you try to sell it for 1,070,000. You've lost the 280,000, but you still got closing costs on top of that, $70,000, $80,000 to close that property. So you're out, wow, about $350,000 just in 6 months. Now, this should be a wake-up call for all of you out there. Now, like I say, it's just an educated guess as to where I think the market's going. But this is a wake-up call. Look, this is happening all around the world, Australia, Toronto, Canada, Vancouver. The market's coming down. Now, of course, not in your area. It's still going up, and I get that. Your area is probably going to double. But look, as an educated guess, this should be a wake-up call for everybody that a lot of pain can happen in the housing market, and we have just started what I would call the housing market crash. Now, when I say crash, it's going to take 18 months to 2 years to play out. It doesn't happen like the stock market. It doesn't go down in a day. No, it doesn't. But it's going to lead. Right now it is leading, right? It started to crash before the stock market did. Well, about the same, actually. But they're both coming down right now. But the real estate market has so much farther to go. Now, why do I think this? Okay, well, in the last couple of years, we went up 20% a year, 20%, 20%, 40% just in 2 years. Okay, that's a big run up. That's why I think we're going to come down a lot quicker. But now, do I think we're just going to go down to where we were 2 years ago? No, now this scares people, right? I mean, I don't want to talk about this, but actually I do. I love talking about it. A lot of people don't want to hear about this, but it's going to come back down to 2012 price level. Look at 2012 where we bottomed out. We never bottomed out, right? People, oh, yeah, Mike, we bottomed out. No, we did not. They pumped in 3.6 trillion just in 2009 just to get this bubble back going again. And it was still dropping. They pumped in trillions and trillions of dollars more with the one mandate to pump up the housing market. And it worked. I'll be the first to admit it. Look we've had a 12-year run. Straight up. But we never let it crash. We never let malinvestment come out of the stock market. It's still coming down. And I think if you want to be realistic, you're going to be looking at 2012 numbers again. Look, you can just go back 2 years. You're down 40% and maybe 50%. Now, maybe I say 50%, but I think that number might be conservative. I think we could come down to the 2012 numbers. And the reason I think that is because they never let it completely wash out. They never let it flush out. They should have let it finish. They should have not pumped in the trillions and trillions of dollars. The reason I say this is because now we're $31 trillion in debt, right? And that's not good because interest rates, they have to raise them now because inflation's so high. Now they're saying it's about 9%, but we really know it's about 18%. It's about double what they're saying. And they got to get this number down or it's going to hurt a lot of people, a lot of poor people, a lot of the elderly that live on their Social Security check cannot buy food now. They got to get this inflation number down. Now, how do they do that? They do that by raising interest rates, right? By killing the economy. In particular, by killing the housing market. Look at this housing market has a lot more pain left in it. There's a lot of pain coming to the housing market. Now, I like this quote by Wells Fargo. I got a chuckle out of it. Anyways, the housing market is much worse than it looks. It looks pretty bad to me, but it's much worse than that. That's what I'm trying to tell you without scaring you, without losing all my subscribers, without getting the hate comments about how your area is still going up. And I'm thankful that your area is going up. I'm just showing what is possible, what could happen, how it works. Look, in 2008, the housing market led the stock market lower. Now, the stock market's going to crash. Now, I'm not sure this is where we're at right now. We may pump this back up a little bit, but the stock market is going to crash probably about 70 or 80% from its high. Now, I'm not even sure that the recent high was the ultimate high. We may push above that still, but it's going to crash 70 or 80%. And it's going to finish. That crash will finish before the housing market finishes going down. That's how you know when's a good time to buy. Once the stock market has bottomed 70 or 80% off and starts to go up, then that's the time to buy the houses, because that means the houses are really close to the bottom. But there's massive pain coming. Once again, just my opinion. Now, you got your own opinion, and I know your area could never go down. I get that. And that's great, but most of the world, not just the United States, most of the world is coming down. Real estate's coming down. And when real estate crashes, it brings everything down with it. Stock market, bond market, it all comes down with real estate. Real estate's like 60% of the world's wealth, 30% of the GDP. Real estate has a lot of pain left in it. It's just getting started. People think it's over already. It's not over. It's like the first inning of a 9-inning ball game. There's a lot more downside left. Look, if you don't believe me, it's just an opinion. You're entitled to your opinion. I recommend you listen to other people. Go talk to your realtor. He'll tell you we're going to double from here. It's a great time to buy, if you want those warm fuzzies. This channel's probably not for you. I'm just saying, I have an opinion, and my opinion is we're going to come back to the 2012 prices. Isn't that scary? It's a little scary. It is to a lot of people. But anyways, I didn't mean to get all, I hope I didn't trigger anybody. But if you like this stuff, you like talking about, why not give me a thumbs up? It's a Wednesday, everybody. Get out there, have a great day, but hit that subscribe button so we can talk some more. I'm Tall Mike. Have a great day. Bye-bye now.